Ladies and gentlemen, welcome to a new episode of the Fintech Hunting Podcast. We have a very special guest for you today. He is an industry thought leader, tech innovator. He's got over 25 years of experience and expertise in financial services, commercial banking, you name it. He's done it, and he's bringing that knowledge and expertise to us today. Please help me welcome Patrick Gluesing EVP, head of the StoneHill Group. Pat, welcome to the show.
Thank you, Michael. It's a pleasure to be here.
Well, it is great to have you. You do have a wealth of knowledge and expertise. Share a little bit of that with our listeners before we dive into everything that's taking place in the industry. I want them to really get to know you and the incredible background you have.
Sure. I appreciate the question and that opportunity. I fondly refer to myself as a recovering commercial banker, Michael. I grew up in the ranks of the regional and super regional bank category. In that process, found myself both looking across commercial, retail, international types of banking verticals, from operations to sales to leadership to risk management. Really was able to get a broad understanding of financial services across several disciplines, and working both in a consumer to business relationship as well as commercial business to business relationships. So that was great. Along the way, I found myself with an assignment in the mortgage side of the bank, and that led me to now become a mortgage banker. And as you know, as several people in our industry would confirm, that once you enter the mortgage realm, you tend to stay there. And I resemble that for sure. And so for the last 15 years or so, I've really been mostly focused in the mortgage space, again, in various disciplines, from sales to operations, various services categories, from originations to servicing to risk management, capital markets. So similar to my general banking background, my expectation of myself has been to be as well-rounded as possible, to understand the business from all of those angles. And so, needless to say, it's been really a rewarding path for me, one that I certainly didn't plan for, but have enjoyed along the way.
Absolutely. And like you said, once you're in the mortgage industry, you never leave. I entered about 25 years ago. People told me that. I chuckled at them, and here we are today. And you're right about there's a lot of great people in this industry. With that wealth of knowledge and expertise, what are some of the biggest challenges and what are some of the opportunities you're seeing in today's market?
Sure. Well, the challenges certainly create opportunities, and we find ourselves in probably as challenging of an environment as we've been for really probably over a decade, right? I think last year in 2021 and 2020, we felt like we were really challenged, but we were really more fortunate, I believe. There was just a lot of volume. So there was, the long-term harvesting of the benefit of very low interest rates, lots of borrowers in the refinance money window. And so it made for a really elevated level of volume for quite a period of time. And because of that, it gave everybody an opportunity to just focus on satisfying client needs and trying to keep up with the volume. And interestingly enough, a year ago, I think we would have sat here and said, boy, our biggest challenge is hiring enough people, right? And keeping up with the volume. So the challenge has now changed really almost a complete 180 here, in the sense that we had all expected, as 21 closed and we entered 22, that there would be a change in interest rates. We knew that the Fed was going to back out of some of their support and liquidity support. We expected interest rates to increase over the year. But what really I don't think anybody expected was just the speed of that change. So within really about a 45-day period, we went from feeling like things were going to continue to be really busy to a situation where rates had gone up so quickly, the 10-year Treasury rate had increased so quickly that it really had everybody stop and reassess, from the borrowers to the lenders to servicers, right? The whole industry, not to mention financial services in general, but the pace of that change really caught everybody by surprise. And like you and I, right? We've been in this business a long time. We eat change for breakfast, right? It's what we do. But this was really something that caught us all by surprise with its pace. So because of that, we've now gone from how quickly can we grow to how successfully can we right size? Can we shrink our organizations to still deliver the service, but do it so profitably and with this new dynamic where the refinance volume is essentially no longer there. And now the focus is on purchase activity and also kind of a broader risk palette, right? So non-QM and other types of origination are definitely going to come to the forefront here as the capacity that is inherent in our industry is looking for things to work on, right? So significant challenge, and yet with that creates great opportunities for all of us. And I think the opportunity is really going to be best for those that over the past handful of years have focused in on being efficient, utilizing technology to enable their people to better serve their customers. And so, it's a mandate to be nimble. It's a mandate to be efficient. And it's also, really a sense of how well can you control your organization and all aspects of it. So I think the great business operators will continue to do really well. It's just going to be different. And the folks who really weren't paying attention to the details are probably going to have a little bit of pain as we move forward. But in every situation, there's an opportunity. And the opportunity here is to leverage all of the great experience lots of us have and say, okay, with this new set of variables, how do we still ensure success for ourselves and for those that we work with?
Great insights, and I couldn't agree with you more. It's about being able to pivot. I love how you said we eat change. We've done it. We've gone through this before. People refer back to 2008. The market is in a much better place today than it was in 2008. So I agree with you. Let's pivot. Let's strategically apply that. Let's talk a little bit about, we'll get into tech because I know you mentioned tech in a second, but let's talk about in today's market, especially as it shifts, risk factors change, the importance of loan quality.
Yes, absolutely. So for the last handful of years, I've been with the StoneHill Group directing this team. And our core competency is quality control. And quality control across origination, servicing, due diligence as well for transactional loan sales and portfolio trades. And it's been interesting that, along the way, the imperative for doing things with quality really never changes. I think it's a basic principle that if you're in this business, the way to be most successful is to make sure that the products you create, the assets you generate, the customers you work with are all in a position to be successful, right? And that would mean high quality loans that perform really well over time. That's a basic principle that everybody adheres to. The challenge, obviously, is that at certain points in time, delivering on that can be difficult. So
that's right.
Over the last year and a half, the challenge with quality was really a capacity issue, that there were a number of people that were brought into the industry, underwriters probably specifically, but even loan officers and processors, everybody in the continuum on the origination side. There were a lot of people, unlike you and I, who weren't in the business in 2008 and haven't heard of having massive default situations and things of that nature, right? So it all seems pretty straightforward, automated underwriting. You clear some conditions and the loan is good to go, and you just do that as many times a day as you can. The problem there, obviously, is that you end up with what we call these errors of convenience, right? People just don't have the experience. They're too busy. And so in that case, it's more about were your processes good enough to manage that risk? And so that's why you have a QC program. That's why you leverage companies like StoneHill, but many companies do it internally to just make sure you're checking off on what you've done. Now that risk is really changing as we enter this market where there's less activity for a couple of reasons. One, there's fewer loans, so the relative importance of quality increases pretty significantly, right? Because
absolutely,
you don't have as broad of a population to essentially wash out some of the risk. But more importantly, we're in this situation where now, instead of fairly straightforward refinances with borrowers that we already know and with these payment histories we know, we're now focused mostly on purchase activity. Purchase transactions are much higher risk. They're much more intensive from an underwriting and processing perspective because it's a large transaction. And at the same point in time, there's not enough impressed purchase activity really to satisfy the capacity appetite of our industry. And so that void, as always, will be filled. And at the moment, it's being filled by home equity loans. It's being filled by non-qualified mortgages and other types of real estate finance, all of which carry a slightly different risk profile and, for the most part, a higher risk profile. So this goes back to what we talked a little bit earlier. You need to be nimble. You need to change. And the way that you do that is by having kind of a consistent and regular process of evaluating where is our quality, what are the things we need to do better or different, and staying on top of that. And this is a high risk period of time. We are talking to many lenders in the industry, and they will admit that they're now originating product that they don't have the command over that they had over some of the refis. And this is not to suggest that they're not throwing their brain away. They're not. I don't feel like we're going back to the old days where we had all day and
piggybacks and a bunch of other crazy stuff. And
right. So I think that stuff, for the most part, has been addressed with all of the regulation and the changes in the industry, right? And so, in fact, that's why you see the portfolio is actually performing pretty well still, because what we did originate over the last few years was very good product. And so while there's probably going to be some performance stress, it would be surprising to see kind of the mass defaults. That would really that would not be because of the way the mortgages were structured. That would be because of something else. So, quality is always important. It needs to be important from the top of the organization down, and you need to have a process that delivers that.
Excellent insights, and I hope people are taking notes. You shared so many good insights and commentary on what's going on in the market. Let's talk then about, we've talked loan quality. What's technology's role in that loan quality and being able to adapt to these new products and offerings?
Sure. And again, I hate to keep referring to us having been in this business a long time, but it's really important to reflect that the technology opportunity in mortgage has been there for quite some time. And it feels like we've made incremental progress, but not industry progress. And so, given the varying appetites to invest in technology, because technology needs to be a really core component of your strategy, yet our business is built upon a collection of companies, tens of thousands of companies in this business, many of whom really are fairly small in nature, right? Real estate is local.
Yep.
That doesn't change when we talk about who originates loans. And so if you're a 10-person company and you're originating mortgages, you're not going to likely have the wherewithal to have a big technology plan. Instead, you just ride other technology that some of the bigger players have. So the opportunity still exists for us to be a bit better industry stewards. From my perspective, I've always thought of technology as something that should be somewhat federated, that technology should help everybody. That I'm less of a fan of saying, hey, I've rolled out some technology that no one else has, and I'm not going to share it.
Gotcha.
So come see me, and I have secret sauce. That's really great that people are innovating in that way. But I think it's really imperative for those of us that are stewards of the industry to say, if we've improved a process that can help everybody, let's look for ways to share that, to use it more globally. I think that's what stands in the way of the true digital mortgage and the blockchain and a lot of the emerging technology of artificial intelligence, machine learning, robotic process automation. Really, all of these things are most effective in a larger ecosystem.
Such
If
good
the
insights.
ecosystem is just, yeah, and so I think we just need to be leaning in that direction and supporting those things. But technology is clearly an enabler. I spent a few years at IBM in the mortgage vertical, and in that time, I was exposed to a significant number of institutions, mortgage companies and banks that were trying to figure out technology, and it is really complex. But I think the smart organizations have figured out a way to say that technology enables people, and we just look for ways to have a better life, right? And technology can do that. I think the organizations that feel like they can replace people with technology are missing the mark a little bit.
Couldn't agree more.
That seems premature.
Yeah, I couldn't agree more with that. I think the tech that enables and enhances the process, I love how you talked about it, really should be technology that can improve the industry as a whole, not just, hey, I've got the secret sauce, it only applies to me. Pat, you've got so many good insights. You and I could keep talking for hours. One other thing I want to make sure we get to, though, is let's tell everyone, for those who don't know who the StoneHill Group is and SourcePoint and some of the things that you guys are doing, tell everyone a little bit about the StoneHill Group and how you can help a lot of these lenders out in today's challenging market.
Yeah, absolutely. So, StoneHill has been around as an entity for over 25 years, very much a well-respected, reputable brand in the outsourcing services space, predominantly in quality control and due diligence, with also some involvement in outsourced fulfillment. In December of last year, we were acquired by the SourcePoint organization and their parent company, FirstSource, in a very strategic acquisition. It was really one of those that you look forward to participating in. The StoneHill team, our customers, our business remains fully intact.
Excellent.
There was no changes for that. The services that StoneHill offers were not things that were core competencies at SourcePoint, so it was very much an accretive acquisition. And what it's done is it's helped both of us. It's added a new array of competency for those of us in the larger SourcePoint organization, and for StoneHill, who was we were a private small company, we now have access to a significantly larger set of resources and capabilities and expertise. So to a degree, I feel a little bit like a kid in the candy store right now that I've got a great array of teammates that are going to help us be even more successful. And so as we combine that, our market-facing approach is really resonating with people right now, that we have the wherewithal to do global, pure play BPO. We have the ability to do domestic, full outsourcing. And probably most importantly, we've now got a really competitive hybrid offering that allows us to have kind of the domestic interface with our clients, the accessibility of things onshore, but the cost benefit of being able to do certain portions of the work in a lower cost environment, offshore, near shore. It's really a very broad set of capabilities. And what we're focused in on, frankly, and this ties back to what we talked about a little bit earlier about federated technology, where we really want to help the market is with the middle market space. The lenders and the mortgage companies who may not have typically had the access to this kind of horsepower and this kind of flexibility in the way that they operate and manage their profitability. So we're working diligently to bring StoneHill and SourcePoint together so that we make all of these offerings easily consumable by middle market to smaller players. And we're seeing a lot of early success on that, some really nice green shoots. So we're really excited.
Fantastic. Congratulations on that. Pat, what's the best way if somebody wants to find out more information about StoneHill, wants to talk to you, what's the easiest way for them to get a hold of you?
Sure. Thanks for asking. You can find us certainly on the web at StoneHillGroup.com as well as SourcePointMortgage.com. I'm accessible via LinkedIn directly with anybody, and we've got an entire team that you can connect with through that website. There's a sales and information email address and things of that nature. So we'd love to hear from anybody in the industry, not just people looking to buy things from us, but really just other colleagues. It's as you know, right? This is a collection of really great people with a common cause, and there's lots of great things we can still do together. So really exciting time.
Fantastic. Pat, I can't thank you enough for being a guest on this episode of the Fintech Hunting Podcast.
Thank you, Michael. Pleasure.